well? Okay, that's great. Thank you. Right. So the format for today will be same as in the previous Q&A sessions. I will make a couple of clarifications right at the start about some questions that students raised either in emails or in forms. And then I will go through the questions that you guys will be posting or have already started to post in the chat section. And we will take things from there. Okay. So the first thing is there was a question about the length or size of the draft version of the report that you should submit for peer evaluation. I think I mentioned it previously. You should aim to have at least 1,500 words, 1,500 words, that is, written in your draft. And this is why this is important. This is important because, firstly, you want to give your peers sufficient information, sufficient analytical material for them to be able to offer you a constructive and helpful advice, constructive and helpful feedback. That's one. Secondly, you need to do your work. I mean, you can't obviously submit just something that is inadequate, that doesn't have anything meaningful or sense or anything meaningful that could be commented on by another group. So you should therefore have at least 1,500 words, 1,500 words in your draft version. Of course, you can have more. You can have much more than that. So I'm suggesting 1,500 words as the bare minimum. And also, ideally, you may want to include in that draft all the sections, even albeit in the draft form, but all the sections, particularly those sections where you're least confident about, so that the other group could provide you with feedback spanning across all the sections. Now, the next question was, again, raised by another student. What do you need to write in the peer report? So let's say you have been allocated a draft report by another group. So what do you need to write, and how, and whether it needs to be an individual or group-based report, peer report? It has to be a group-based peer report. So your group will have to get together virtually, of course, in this situation. You have to read through the peers draft report, and you have to jointly put together approximately 400 words, up to 400 words report, brief report, or a review of what it is that you found that other group has done well, but even more importantly, what it is that you think the other group can do differently to improve their work. So you want to use those 400 words. So your group jointly would have to use those 400 words to suggest, to help the other group to improve their analysis, to improve their work. Okay. So in terms of what it is that you advise, it's entirely up to you, of course. But this is an opportunity for you to help the other group by providing comments. But also, this is an opportunity for you to learn maybe something from the other group by looking at how they have done tasks or similar tasks to the ones that you will be or have already done for your project as well. Okay, so I hope that is clear. Another question unrelated to the group project was about the solutions to the multiple choice questions of Unit 5. Now, some of you have, I've seen that a number of people have attempted the MCQ, this activity for Unit 5, which is great, but I would encourage all students to try the MCQ for Unit 5 first. I will upload in that same section of the activity indicative solutions to the computational questions of the multiple choice sort of exercise, of the multiple choice question activity of Unit 5. But I will do that later on this week, at the close of Friday. Why? Because I want to give more time for more students of this course to engage with this activity, to try the multiple choice questions before releasing the solutions or answers for the computational questions of the MCQ, okay? So please be patient. These computational questions will be, as I said, the answers to these questions will be released, but in a few more days. And the reason is because I would like more students to, first of all, try the questions before they see the answers, because the benefit of seeing the answer right away is not that great. It would have been greater if you could try these questions on your own. If you don't know how to work them out, reread the relevant chapters from the textbooks and then try again. And at the end, you will get the solution posted on Moodle anyway. But before that, ideally, you should try to exhaust your own resources, so to speak. Okay. So to summarize, again, end of this week, I will post the solutions to MCQ computational questions, not all questions, but the computational questions. So this is pretty much it, what I wanted to mention about some of the questions that I received. Maybe just one other thing that to remind you, or rather a couple of things. Please make sure you continue logging your activities in the in your meeting log document. You remember I've always reminded you that you need to maintain your meeting log document, even though it's not meant to be submitted formally. But if there are any issues later on, you will be requested to provide the meeting log. And the meeting log is the document where you record all your meetings, all the things that you've discussed and agreed, and who was present, who participated, who not. Okay, that's about the meeting log aspect. Right. Okay, now I'm opening the floor to you guys, to any questions you might have. And here I already have a question in the chat. So the very first question, which, so I'm starting from the very first question. The question is about the fact that the data on companies, the financial statement information or the annual report for your company hasn't been published yet or released yet. Okay, so this is a very common situation given the time of year we are in, and given that the majority of companies, at least in the UK, have December as their year end. So it is very likely that most of the groups will end up in this situation where at the time when you are working on your project, you will still not have the annual reports published by the companies for the year that has just ended. Okay, so what to do in this situation? Well, in this situation, firstly, let me just go back a little bit and remind you what you are required as part of the project, as the ultimate outcomes or ultimate outcome. You need to generate the price target, and you need to generate the investment recommendation for your project. So what is a price target? Price target, let me just remind you, is your estimate of the company's stock's intrinsic value 1 year from the date of your analysis. So let's say we are March or middle of March. As of that day of analysis, you should be forecasting or estimating the intrinsic value of your company's stock for the March 2022. Okay, so we are now in March 2021, but what you need to do is the price target, that is the intrinsic value of the stock for March 2022, that is 1 year forward, 1 year from now. And how do you estimate that price target? Well, depending on the model or models that you're going to use, let's say you're going to use one of the discounting-based valuation models. Could it be a dividend discount model or residual income valuation model or one of the free cash flow models? Essentially, you need to estimate the value as of March 2022. That means you will need to have forecasts of cash flows or earnings or dividends or whatever is the numerator in your models after year 2022. That is year 2022, 23, 24, whatever is your forecast horizon. And then discount them back to year 2022, to the March of 2022. So this means that if you don't have your year 2021, that is March 2021 figures, you need to forecast them as well, so that you can then go on and forecast the accounting information or data, the numerators for the valuation models for year 22, 23, etc. Okay, so essentially, therefore, you need to go back 1 year to year 2019 or 2020, whenever the company reported its last set of accounts, actual numbers, and from that date onwards, you need to work out or forecast the relevant line items, the relevant financial statement data points. I don't know, whatever your model is, as I explained, it could be earnings-based or cash flows, for years starting from this year, from 21, okay? And that is why, because we still don't have, or at least some of you, for many of your companies, there still will not be the year 2020, the March 2021 figures reported by companies in March, okay? So you need to forecast this data. So essentially, you go back in time, as you have in your question. Yes, you can start from year 19 or year 17 or year 18, whatever. You could go back, 2, 3, 4 years and start looking at the trends or some fundamentals from those years, and start by generating your first forecast for the current year, that is March 21, and then move on to the follow-up years. So that's how you will generate the forecast, and then by using one of the methods, valuation methods, you will estimate the intrinsic value of the firm 1 year from now, which is your price target. And then based on that price target and today's actual price and what you believe is the cost of equity capital, based on that relationship, you will then work out the investment recommendation. Right? If you recall, we have, I think on slides 14 or so of unit 2, but correct me if I'm wrong, it's in one of the units we cover the topic of investment recommendations, the formula for the investment recommendation and a relationship between price target, dividends, investment recommendation, and current price. So you need to use that relationship to convert the information about your price target and the current price into an investment recommendation. Yeah, so that's one approach. Another approach to generate an investment recommendation would be to estimate your company's intrinsic value as of right now, as of March, and compare that intrinsic value to your current stock price. So your stock price in March right now compared to the intrinsic value in March right now, year 2021. And whatever is the difference, that will give you an indication of what should be the investment recommendation. Okay, that's just about the investment recommendation. But regardless of how you estimate or work out your investment recommendation, the project also requires you to estimate the price target and state the price target on the first page, essentially, of your report in the summary section of your report. Okay, so I hope that answers the question. In terms of still, some of you, I don't know, you may have realized or may not have realized that even though your company has not reported its annual financial statements yet in the form of a published annual report, but many companies have already gave their earnings releases. Right? So these are not really annual reports, so to speak, formal annual reports, but those are already reported, unaudited reported numbers that reflect the year that was ended in December 2020. Okay, so you can use these numbers, of course, without waiting until the company actually audits them and produces an annual report and publishes its annual report. So if the company has already made an earnings announcement, there were some conference calls for earnings announcement recently, yes, you can use these numbers as actual numbers for the current year that has just ended. Yeah. So that's also doable, and you should do that. So I hope that I answered that question. And actually, the next question seems to be about the same. Then I will move on to the last question that I have in the chat. So let me just read it out. Right, it appears there are a few questions about this group assignment the person has. So the first question, in question 3, should we just mention the accounting issues and red flags in bullet points, or we have to give detailed explanation? Look, you don't want to, in your, okay, I understand the question is about the third section of the group project, where you need to do some ratio analysis and some assessment of the company's accounting, overall accounting sort of policies and practices. Now, I guess your question is about the accounting issues rather than the ratio analysis, so to speak. You only mention things that you observe for your company. So if you don't find any issues, you don't need to report things. You don't need to explain things. But if you, for example, compared your company, let's say you're analyzing Lufthansa, or EasyJet, right? And one of your main peers could be a number of airlines that are based in other European countries. Let's say Ryanair, okay, one of the other major competitors, budget competitors, Ryanair. Okay, Ryanair is an Irish company. They are based in Ireland, not in the UK. So you might look at Ryanair, what sort of accounting policies, assumptions they are making, and that you could also look at your company's accounting policies and assumptions. And if you spot that there are really great difference between the two, which might potentially result in your numbers not being comparable, yes, you can mention those. However, it doesn't mean that you really need to go on and do some restatements or reformulation of accounting financial statements. So we don't expect, as part of this project, that you start doing any reformulations of financial statements. No, that would be just simply too much. But what we would expect is that you would highlight any issues, or as you refer to here, any red flags, if you come across any such matters, in that section 3. Otherwise, you just discuss and present the ratio analysis, accounting ratio analysis in that section. Okay, your next question is about the sections 4 or 5. I'm not sure what you mean. I think the question is about appendixes. Right, and you're asking, should you provide a screenshot of calculations in Excel or to prove your estimation? Not screenshot. You should include tables, proper tables with your valuation, let's say, or forecasting, showing your valuation and forecasting in the main body of the report. So let's say you are talking about section 4 of the report, which is about forecasting. So what you can do, let's say you are forecasting cash flows, you should include the table, maybe just copy it from Excel spreadsheet, stick it into the Word document, but format it nicely. So a table that shows your forecast and maybe some of the underlying assumptions. So your table with notes attached to this table, not attached, but notes that are accompanying the table, should clearly explain to the reader how these numbers have been generated. Right. Same with evaluation. Again, if you use let's say, free cash flow to the firm valuation model, you can't just say, we have used the free cash flow to the valuation model, and we estimate the value to be, intrinsic value should be, or price target should be £12 per share. Okay, how do I know that you've done it correctly? So you need to show the table where you show the actual inputs, the cash flow figures, the cost of capital figures, whatever the terminal value, how you've computed the terminal value and what assumptions were made for the terminal value calculation, etc. So you need to include those things. Now, I wouldn't recommend you doing it like a picture, but just do the proper table in either Word or Excel and put it on the Word document that you're going to submit. Okay. So that's about Excel. Make sure you don't include any appendixes. There are no supplementary appendices for this project. Everything has to be, or any table that you do has to be contained within the relevant part, relevant section of your report. So I hope that I answer this question. Next one, since we should not add any appendices, we are required to give some references in footnotes. Do we also need to provide the URLs and access dates? Well, you need to provide references to the sources, yes. So if you are, let's say you have presented, let's say in section 3, you have several tables for different ratios. Let's say you are presenting ratios for your company, accounting ratios for your company, and comparing it across section, so across your company's competitors, peers, and maybe you're comparing it over time. So at the bottom of the table, or at the bottom of that page, you would need to say the source. For example, source company annual reports, or source such and such database with the URL. You don't need to give the dates of access. Why? Because we know that your dates are actually now in March, right? But you need, if it's an URL, you need to give the URL. If it's a document online, you need to, give that whatever proper reference to that document online from which you got information. Or if it's from a database, like from Thomson 1, you should also say data from Thomson 1, for example, or from Bloomberg, or whatever data source you might be using. Okay. Next question. In the forecasting section, we forecast stock price and financial performance of this firm. Anything else involved? No. In the forecasting section, you don't forecast for stock price. No. In a forecasting section, you forecast the inputs for your valuation models. Okay, guys, please don't confuse things. Your section on forecasting, what we mean by forecasting is to generate numbers that are the inputs, that are the parameters that are going to be used for your valuation models. For example, the growth rates, cost of equity capital, cost of weighted capital, whichever you're using, your forecasts of cash flows, your forecasts of dividends, of earnings, book values, or whatever other line items that you need in order to use them later on in your valuation models. What I mean by later on is in section 5, in the last section where you're going to use the valuation model. Okay. And when you are doing this, generating these forecasts, you're showing the numbers, as well as you need to explain any assumptions that you are making, any rationales, any justifications. Let's say if you only say, we assume, our group assumes that our company's long-term growth rate of dividends is going to be 3.5%, and just stop there, I would say, look, why 3.5, not minus 0.5, and or not plus 11? Where did this 0 point or 3.5 came from? So you need to provide an explanation. What is the rationale or logic behind? Similar to other forecasts, you might be including a table showing, let's say, your earnings forecast, but if you say nothing about what's the logic behind the changing numbers of your earnings for the years to come, for whatever is your forecasting horizon, if you don't provide an explanation, then how the consumer of your report, or how your client, that is the buy-side client, or myself in this regard, how I'm going to know that these numbers make sense? You need to explain, you need to convince. Okay, explain, justify. Right, another question, furthermore, do we need to cite each time sources from the annual report or other sources the company itself published, or would it be enough to mention, as long as we don't reference those information, will be officially published data from the company? I'm not sure what you mean. Look, if you're presenting a table, as I explained, if you are presenting a table with, let's say you are doing the business analysis section, right? And let's say in the business analysis section, you are briefly discussing your company's segments, operating segments. Maybe you are showing there that 75% of revenues come from segment A and 10% comes from segment B, and the remaining 15% come from segment C, right? Where does this information come? Well, say it at the bottom. Data from, or information from, annual report 2020. And keep doing that, throughout. But you use common sense. I mean, if you already mentioned that your accounting information for your company comes from annual report, you don't need to constantly mention that, right? So just say that the accounting statement data for my company is coming from the company's annual report, or wherever it's coming from, so that the reader at least sees where the data comes from. But I don't really think this is a big issue, to be honest with you, provided that it's generally clear where your data, where information is from. That's fine. I don't think that's an issue really to be concerned about. Do we need to put formulas in the table when doing ratio analysis, and whether the tables are included in the word count? Right, I think I've answered that question about what's in the word count, but it's actually written in the document. Please, can you read the document really carefully again? Because this question is explained, and that's actually in bold. The word count of the project is for the words, for sentences and phrases. It's not counting numeric information in tables. You shouldn't be, if you present a big table full of numbers, which are basically ratios, you don't count those. And this is what the project requirement document explains. So please do refer to it again. So what you should be counting is anything that is text, words, phrases, sentences. So what if you, for example, for the sake of making your report look beautiful, presentable, if you are going to use some sort of boxes, text boxes, or tables, but which include text. Let's say you present strengths, weaknesses, opportunities, threats, like these 3-4 aspects in your business analysis section, but you show it as a table, and within table you have bullet points with sentences or phrases, but everything is text. There are no numbers, so that should be counted. But if you have a table, as I said, ratios or table that shows your valuations with numbers, then these are not words. They should not be included in word count. Okay. In terms of formulas, no, you don't need to report formulas, but you need to show what your ratios are. For example, you say, again in the table, ROE, return on equity, right? So what is the numerator, what is the denominator? Numbers. Just show the numbers. Why this is important is because we want to make sure that, again, we understand what numbers you have used. Not the formulas, but the numbers. So if there are any issues, we do actually cross-reference, cross-check the select number of sort of data points that you're presenting with the data from the company's annual report, right? So you need to show essentially the actual numbers that went into your ratio. So another question, in question 3. So I'm not sure what you mean by question 3. Do you mean the section 3 of the report? I'm sorry, there is a question. I'm just going to read the question, but I don't follow the question. In question 3, how can we start our view on credit risk analysis except the annual report? I'm sorry, I don't follow the question. Can you maybe rephrase it? What do you mean by the question? So please try rephrasing it. What do you mean, how to start your view? The person who's posted the question, please try to rephrase it because I'm not sure I understand the question. I'm moving on to the next one. Next question reads, we need to show calculations in the table for accounting ratios. Yes, the answer is yes. Next question, I'm going to read that. If the company uses other currency in their financial report, like euro, do we need to consider the exchange rate or while converting it to British pounds, as the target price would be stated in sterling? Right. You would only need to do this, that is converting something, if you are directly comparing, let's say, the value of your company's price with the value of another company's, of a foreign company's price, even though I'm not quite sure why you would be doing that, because when you're doing your, let's say, accounting ratio analysis, everything is in ratio, so the currency doesn't matter, because in the numerator denominator they all cancel each other out, so currency doesn't matter. When you do an evaluation based on discounting, again, you are not using any competitors' accounting data to value your company, because when you're using any discounted either cash flow or dividend or residual income sort of models, only information you need is for your own company. Hence, again, the issue of exchange rate conversion is not important. Um, Even when you are using the method of comparables, because in the method of comparables, yes, when you are comparing your company's um, intrinsic sort of value or relative value with that of your peers, but even then you are using multiples, financial multiples like price earnings, EV to EBITDA or EV to sales. Even then the exchange rate doesn't matter because everything is in multiples. So I'm not quite sure really in which situation or which instance you really need to use any exchange rate conversion. I'm trying to think where it is that you might need to use it, and I can't right now think of any.
Sorry, can I
Yes.
just quickly mention
Oh,
that
yeah.
in
Okay.
the last part, we need to like get an evaluation based on the model. So if we are using euro to do the calculation, then the target price would be in euro. But
Is your company reporting in euros?
Yeah.
Okay, so it is in euros then.
So what about its stock price right now? Do we like when we're comparing it and to see if it is like undervaluating the stock or not? Do we need to like convert it to British pound?
Oh, are you saying that your company is reporting financial statements in euro?
Yeah.
But it doesn't. But it's its stock is listed in London, and therefore the price is in pounds. Is that what you're referring to?
Right.
Right. Okay. Yeah. Yeah. In that case, yes. In that case, yes. Well, once you have estimated your price target, whatever that is, or
Right.
your intrinsic value, you just convert it into either you convert the actual actual price, the pound price into euro, or the euro target price into pounds. But that's up to you, really.
Right. Sure.
Yeah. Okay, I now understand the question. That makes sense. Okay, but that's the only instance when you would need to make any conversions. I don't think in any other elements of the report or analysis you need that, right?
Yeah, indeed.
Okay. Yeah. Okay. Good. Moving on to the next question. Does that mean we shall put the justification of numbers derived in the footnote, and that would not contribute to the word count? The justifications, guys, whatever is words, any justification, any rationalization, any discussion should be in the main text, in the note, not in the footnotes. Footnotes should only be reserved for referencing the data sources. That's it. If you choose to write text in the footnote, text that explains something, then you have to count that text. Once again, try to make your report simple. And I'm trying to convey to you one simple principle here. The principle is that words, sentences, if they are about the project, should be counted. Numbers should not. And it doesn't matter where your sentences are, whether you stick your sentences in a table format or in a note format or whatever, they are supposed to be counted. Anything that you write in words to explain things needs to be counted. Numbers, note. Okay. I'm not sure if I explained it clearly enough, but that's the principle. Moving on to the next question. Should we show the detailed process of how we calculate and generate the forecasting data, input of valuation models? You need to provide, my answer is that you need to provide sufficient information so that the person who is reading your report or who is going to mark your report or is going to provide feedback on your report can understand where these numbers are from. For example, if you say I am assuming, for whatever reason, and you have to provide the reason, of course, I am assuming that my earnings or my sales are going to grow at 4% per year, starting from this year, during the entire forecast horizon, let's say 5 years. Right? Then in the table, it would be redundant to show the calculations, that is last year times 5%, then for the next year, this year times 5% equals that. No, that would be redundant. You could just show the actual numbers because you have already explained the rationale. So if I look at your table and see in your cash flow table, you have 1,000 for this year, 1,050 for next year, 1,000 I don't know, 105 for the third year from now, etc. I will know why this is 150, 150, 100, 1050, 1105, because you've already just explained that your sales are going to grow at this percentage point, at this 5%. So I see that, okay, it means if my current sales are 1,000, 5% growth means next year sales should be 1,050, which you have in your table, okay? But if your cash flow forecasts are not based on that simple logical rationale of just annual constant growth of X percentage, but you are forecasting your cash flows by individually forecasting various cash flow line items, then you need to show those line items so that we can see where your free cash flow comes from. Okay, I don't know. Does that answer the question? Please,
Hello,
please say
Professor.
if it doesn't. Yes, yes.
If you don't mind, could you please repeat yourself? I kind of lost my connection, so I didn't get the last part.
Okay, so the question was about whether you calculate and show the process of calculation or generation of your forecasted data as inputs for your valuation model. The answer is the following. Let's say in the text where you're describing your forecast, you made an assumption and explained the assumption that your cash flows, I'm just making it up, okay? It doesn't mean that you do it that way, but I'm just giving an example. So let's say you're assuming and stating it that your cash flows are going to grow at 5% per year for the next 5 years. And then in the table where you report your cash flow forecasts, you don't need to show the calculation of every subsequent year's cash flow. You just show the actual numbers. Why? Because in the text you already explained that what these numbers come from, where they come from. They come from a growth of 5% per annum. Yeah, I can see it right away. Okay. But if the logic of your forecast is a sort of more elaborate, so you're not assuming some sort of constant sort of growth rate, but you're going to, for example, generate individual forecasts for operating cash flows or whichever approach you use to work out the free cash flow, let's say, to the firm. Let's say you're doing separate forecast of operating cash flows and separate forecast for capital expenditures, right? CapEx. Then you need to show these line items because you're doing them individually in this case. So you need to show the constituent line items so that we can see where your cash flow numbers come from, your cash flow to the firm numbers come from. Right? So either explain so that it is clear why these numbers, or show where these numbers, how these numbers are worked out. Yeah. The fundamental principle again here should be make things clear. When I'm reading the report, I'm looking at the table, I might be thinking, oh my God, where has this number come from? I've not seen this number or anything that explains this particular pattern in section 2 or section 3. So where is this from? So it is therefore a hallmark of quality and rigor when you don't leave many gaps in your writing for the person who is reading to have questions about, you answer these questions in your writing, or you show where the numbers are coming from or how they have been generated. Okay, I hope that that explains that question. Does our draft have word upper limit? No, it doesn't have an upper limit, but I don't think your draft should be longer than the final draft, and the final draft does have an upper limit, doesn't it? Yeah, well, I don't think it's meaningful or sensible to write 5,000 words and submit it for your other peer group to read it, because your final report is only going to be about 3,000 words or something like that. I can't remember the exact word limits, but refer to the document, please. Yeah, but yeah, anything between 1,500 words and the maximum word limit for your final project is absolutely fine for the draft version. Okay, moving on to the next question. Do you have other database to recommend that we can find the analyst reports? The Thomson one is really hard to access, even use the, no, we don't. Unfortunately, we don't, no. Unfortunately, Thomson one is the only one we have, and I agree with you, it's really pain. It's really pain to access it. Right as we speak, on my other screen, I have Thomson one, and let me just try and sign it in and let's see if it's working. But you're quite right, it's very temperamental. It's sometimes it's working, sometimes it doesn't. Okay, it's working right now as we speak. I don't know. Try at different hours. This is something that I suggested in one of the other sessions. Unfortunately, because this database is in heavy use by professionals as well, this is not just for academics. This is a lot of people, when the United States wake up, usually it gets very, very, very busy, and also because a lot of investors and analysts are actually in it. So unfortunately, that's the only thing that we have. Okay, another question. We don't need to put formulas, but should show calculations, right? Yes, that's right. Next question. How many peer companies should we have in the report? That's entirely up to you. That is entirely up to you. I think I've in the forum, in one of the forum posts, if you guys, can I also remind you, maybe from time to time, check the discussion forum for our course, because when you post questions, when students post questions, I answer questions there on forum. And for instance, this question or similar question was there about peers. So read my response there. My suggestion would be to look at sell-side reports for your company, and just as a rule of thumb, use roughly the same number of peers as the professional analysts have identified, have been using for your company as well. But you will realize that for certain sections of the report, or for certain tasks, you may have more peers than for others. For example, in accounting ratio analysis, it's likely that you wouldn't have an issue of comparing your company with peers. But for the valuation section, if you are going to use the method of comparables, and let's say if you choose to use the price earnings multiple as one of the multiples, valuation multiples, it is likely that some of the peers, if not indeed your own company, might have negative earnings. So if that happens, then you have to discard either the multiple altogether, or at least to exclude peers with negative numbers. So it means you're going to use for that particular multiple less peers, right? Because for some negative multiples, for some of the peers who have negative multiples, you can't use negative multiples for the peers. You just need to basically drop them, eliminate them from your analysis. For example, a PE of -7 doesn't make any sense, so you can't put it in your calculation of the average multiples and work out the average across the peers. No, you just need to ignore it. Same with your company. If your company is a loss-making company, then you can't necessarily use PE for your company. And similar to some of the other multiples as well. But I'm not going to give you a number, how many peers. It could be 3, it could be 4, it could be 5. It could be just 2, depending on the sector and the size of the company. Whatever you believe is a good match for your company. And the principle for matching, again, have a look at my post on Moodle for this question, but also see how analysts covering your company are selecting their peers. And by the way, if you go to Thomson 1, let me try to go back to Thomson 1 and log in. If you go to Thomson 1, on the very first page, before even you go into the research tab, on the very first page, you could request just generic information about your company. And Thomson 1 is actually very good because it is actually listing the companies that Thomson 1 thinks are the peers for your company. Let me just try to see if I can just log into Thomson 1 and share my screen, if it's working. Let me just try. I'm just trying to log into Thomson 1 and see if it's generating anything to show what I mean. Okay. Ah, interesting. Now it's not letting me in, unfortunately. Again, I'll try again. But guys, when in your own time, go to Thomson 1 again, and before you go to the research tab to look for analyst report, just don't go there. Just go to the company view and type your company's name just to see the generic information that Thomson 1 has about your company. And there are lots of interesting things because it would also be showing you segmental composition of your company, its peers, its credit rating given to the company by credit rating agencies. So there are lots of bits of information that you will find useful, including peers. So to answer your question. Next one. Does the draft require to follow the formal structure? It is advisable. It is advisable. Okay, if you don't follow the formal structure, I presume you will make it a bit more difficult for the other group to read and comment it constructively. So it would be advisable for it to be properly structured to the extent possible, of course. Next question, can we compare IFRS company with US GAAP company? Yes. Yes. Okay, in terms of the accounting, in terms of unit 3 of the course, where we cover the differences in accounting assumptions, treatments, and therefore potential issues of incomparability or low comparability of companies' accounts reported under the US GAAP versus IFRS or any other national GAAP. Conceptually, this is important, of course, to have regard for these differences, but as far as your group project is concerned, please just ignore the differences and feel free to compare across. You're not required to go into this extensive and very difficult, quite difficult accounting task of adjusting numbers, restating the US GAAP, let's say LIFO, FIFO based inventory accounting into IFRS based accounting for inventory and cost of sales and stuff. No, you don't need to do any of that. You don't need to do any conversion, any adjustment. Just use the plain figures. So we are going to assume that these numbers are comparable. They are they are based on the same accounting assumptions or principles, even though this may not necessarily be true. But this is not an accounting course. This is not a financial statements course. This is a course on valuation. So we want really to get hands-on experience on valuation of the companies rather than getting buried into some accounting adjustments, which for which you would need a whole separate course, really. So we're not doing that. So I hope, yes, this answered the question. Another question, hi, do we need to use FTSE 350 companies? Again, this question has been answered, in fact, twice on Moodle Forum. Please go to Moodle Forum and look for the answers. The short answer is no, you don't need to use FTSE 350 as peers. For peers, you use companies that you think are peers. That is, companies that operate in the same sector or compete for the same customer base or serve the same markets. Most of UK companies are large international companies with global operations, and they will have peers in different parts of the world. So you can use peers from the States, from China, from wherever you like, from wherever the company is actually operating. Okay, so you don't, your company, obviously, the company that you have chosen for your work is one of FTSE 350, but the peers that you are going to use isn't. Okay, guys, we need to wrap it up. So I'll just answer the final couple of questions, and I will end this this Q&A because we need to go into our seminar 3 for our calculations of a couple of valuation models there. What is the minimum word count for the draft, guys? I think I've spent 10 minutes talking about it. The minimum should be 1,500 words. I've started this Q&A just explaining that. Please listen carefully. So for the peer company, should we choose the company which has similar? Okay, this is the same question about peer. Please go to the Moodle. The answer is there. Next question, must credit risk analysis be written in the part of analysis of the firm's financial performance and position? Yes. The answer to this question is yes. Okay, guys, so we are already slightly over time. It's 1 minute past 2, and our seminar is starting at 2. So I'm going to end the session. Thank you very much for participation. Now log out of here and please log back in for seminar 3. Make sure you use the correct group. There are 2 groups. Use your group to log in. There is 2 seminars to follow today. Okay, so see you later in a few seconds or in an hour if you are in the other group.